Stock market returns are never guaranteed. But when we do the research properly and analyze the market in a right way, then we get an edge in the market, but risk management simply cannot be ignored. The S&P 500 gained over 1.4% this week. Nasdaq continued higher and sentiment remains firmly in the grid zone with treasury yields inching up and dollar pulling back. Are we still in the healthy trend or approaching exhaustion? Let us analyze. I am DK Sinha, and in this weekly outlook, we will review macro signals, sentiment indicators, and technical structure of S&P 500 and Nasdaq 100. Weekly market recap. The S&P 500 advanced by 1.46%, while Nasdaq 100 rose by 0.9%. The Dow Jones Industrial Average outperformed with a 1.26% gain, and Russell 2000 added 0.99%. The Metaverse ETF Roundhill Ball remained flat this week, down 0.27% after last week's explosive performance of 6.4% jump. Since April, it is still up 61%, reflecting long-term optimism in tech metaverse space. Market sentiment and macro overview. The fear and greed index held steady at 74. Still deep in the greed zone, the put-call ratio, 5-day average, stands at 0.65, which may signal elevated bullish sentiment. The VIX continues to trade below its 50-day moving average, indicating that the volatility is low despite rising prices. On the macro front, the 10-year Treasury yield ticked up slightly to 4.402%, while the 2-year yield is now at 3.914% and the 30-year yield is near 4.947%. This uptick reflects recent labor market strength and resilience in the US economy, suggesting that the Fed might maintain its data-dependent stance. Global market overview. Globally, the tone remains constructive. UK's FTSE 100 gained 1.43%. Germany's DAX was nearly flat, down 0.3%. Japan's Nikkei 225 led with 4.11% rally. Hong Kong's Hang Seng Index gained 2.27%. India's Sensex remained flat, dipping 0.36%. Meanwhile, the dollar index, that is DXY, closed at 97.673, down 0.8%, helping global risk assets. Bitcoin was flat at 0.40% uptick, and Ethereum pulled back 0.29% after last week's massive jump of 26%. Now let us move to the price chart to undertake the technical analysis of S&P 500 and Nasdaq 100 and understand the underlying price action to mark the possible demand and supply zones. This is the weekly price chart of S&P 500 index. This week, the index finally closed at 6,388.64. In the last week, we had discussed about the possible extension level using the Fibonacci expansion tool, that is 6,380, which is nothing but the 61.8% expansion level with respect to the prior impulsive wave. And now the price in the last week has made a high of 6,395. So this level stands achieved. However, the 100% expansions arrives at 6,768. So there is still a cushion for upside move. When we check the RSI of S&P 500, there is no visible bearish divergence on momentum indicator. That gives a hope that it might go further up. However, considering the price to be extended or overextended, we might see some pullback. Now, considering the overall structure, this was the area of resistance. So it has formed a very good base at 6,100. So 6,100 to To be very precise, 6,173 is a good support area. If we check the daily price chart, what we find is the price has created a gap over here. And again, the last trading session candle is a bullish kicker kind of candlestick pattern, which is a typical sign of some kind of exhaustion at the level which has already been achieved. Why? Because this is the first level of gap, and another gap might create an exhaustion of upside momentum. But considering the consolidation over here, there is an intermittent support of 6,250 level where there is an existence of EMA 21 as well. So overall structure is bullish. There is no sign of weakness in the market. However, pullback in the overall markup phase cannot be ruled out because the price has run up too fast in the recent time. If I draw one trend line, which will give you a further insight, I am drawing a trend line. What this trend line is important is because after the recent downtrending move, this is a rising trend line which represents the neckline of inverse head and shoulder. This is the left shoulder, this is the head portion, and this is the right shoulder and a breakout. So this rising trend line might act as a dynamic support whenever there is a pullback in the market, and it coincides almost with EMA 21 as well. Now this is the weekly price chart of Nasdaq 100 index. Index finally closed at 23,272.25, and now it is approaching this trend line which we had discussed in the last week. This is the resistance, resistance, resistance. So this trend line is acting as a dynamic resistance in Nasdaq 100, and the price is now fast approaching towards that. We also discussed about the expansion level with respect to the prior impulsive wave, and 61.8% arrives at 23,450 or 60 level. So it is approaching at this is the intersection of this rising trend line, which is acting as a dynamic resistance, and 61.8% expansion level. We might see some kind of pullback after it attains that particular level. Here too, when we check the RSI, the momentum indicator, there is no sign of any bearish divergence as of now. Now, this is the daily price chart of Nasdaq 100. What we can find, the EMA 21 is acting as a dynamic support, and EMA 21 here. And there is a consolidation over here. So 22,600 to 22,800 is a intermittent support area or demand zones. However, the major support area is the existence of gap over here, which is at 21,871 to 22,000 is the major demand area. Here too, we can draw a trend line, a rising trend line. See, this is a rising trend line, left shoulder, head formation, right shoulder and a breakout, and the price during the consolidation has rested over this neckline of the inverse head and shoulder and a rising neckline. So this neckline will also provide some kind of dynamic support, and little below of this rising neckline is EMA 21 and EMA 55. Conclusion. To sum up, the US market remains in a strong uptrend, supported by macro tailwinds, global optimism, and low level of volatility in the market. However, the sentiment is now quite stressed, and any negative trigger could lead to sharp profit booking. Stay cautious, especially in overbought names. For those who are looking to deepen their understanding of technical analysis, check out our Zero to Hero playlist, link in the description. Like the video if you found this helpful, and don't forget to share, subscribe, and enable the notification for our weekly updates. Learning never stops with DK Sinha.